The XLV, the S&P healthcare ETF, falling by more than 1% today, down 4+% since January. It's among the worst performing S&P sectors this year. The chartmaster updating his healthcare call over the weekend, pointing out that the sector has notched 8 consecutive weeks of declines. For the first time ever, he says now is the time to, quote, play for a bounce. So, should you heed Carter's call? Karen, what do you think?
Well, I am in it, so yes, I think you should. I think that, a day like today is a good place to start because it had done well last year, was seen as very defensive, very not expensive at all, big dividend yield. All of that is still true, but it was sort of left for dead while the go-go stocks and anything super levered didn't make money, all of that were in vogue. And now I never should have not been in vogue, but that's okay. I still think all of those things still exist and held up nicely in a difficult tape.
I agree. Like when you say it should have never not been in vogue, I think what happened is everybody was very optimistic last year, and then this year came and everybody jumped into your really high risk assets, which I think all of us kept saying, you really want to be wary of that rally. And now you're seeing all of that shift. Everybody's worried about inflation coming in and rates being higher. So now you're seeing a shift back towards things like healthcare. And I think a lot of the fundamentals remain really strong. Like if you take a Merck, for example, they've actually spun off some of their lower margin businesses. And they're just are now going to be a lot more lean and mean, have a lot of good pipeline as we look forward. So I would actually continue to play the healthcare space.
UNH traded down to levels we saw in June, has bounced. And I'm with Carter on this one. Eli Lilly is one that people will look at, correctly so. I mean, the stock's $60 off its all-time high from $380 to this level. Yet if you go back to 2019, when it was a $150 stock, we've seen moves of this magnitude to the downside 6 or 7 times. It's not out of the ordinary. And as people got into Courtney's point, some of these high flyers and got out of their healthcare, they're going to circle back real fast into healthcare. So I'm with CBW for sure.
I mean, when you're looking at a more defensive market, for sure, it's going to become more in vogue as we're seeing rates go higher. And if we're actually in higher for longer, then that is the time, I would imagine, for things like a healthcare to shine.
I hope so. I think so. These multiples, I mean, are really well under the market now. Maybe you could say it's a different kind of business, but I think we'll see some M&A as well.
Which could be a good thing or a bad thing.
It could, right? If they overpay,
right?
Yes.
That's always the case.
That's right. No question. True. I mean, but with that said, I'll go back to the lure of fast money when
the lure of fast money.
Johnson & Johnson bought Pfizer's consumer products business for like $16 billion. And the price tag was, I think, 11.5, 12. And we talked about it on the show. What are they thinking? Turned out to be the bargain of a century for a company like J&J. Right. So deals that seem overpriced wind up working pretty well in this space.
I was thinking more like Gilead's.
Gilead's, you know what? They have a balance sheet. And by the way, the CEO of Gilead, not that anybody here cares.
Fan of the show?
Georgetown graduate, class of 1986, Daniel O'Day.
More you know.
D-Day, we used to call him.